Good morning from Los Angeles. How's everybody doing? Welcome to Power Hour every Monday, Friday, 10 a.m. Pacific and 1 p.m. Eastern. We're going to do this Mondays and Fridays, so please join me live for about 45 minutes to an hour. How's everybody's week going? I'm going to give you guys a little heart-to-heart talk, and it's the first time you guys are seeing me without a head, I think, right? Once in a while they got to air out the bald. Anyway, hello, Techie B. Hey, everybody. We're gonna continue with the education process. But I really have some straight up opinions about the market of what's going on, and some of you may like it, some of you may not like it, but my opinion only. Before I start, this is not financial advice, it's not trading advice, it's education, information. So always check with your financial advisor before you make a decision. And so three things we're going to talk about today. One is going to be go further into options. Hope you got your books, hope you guys are reading. Number two, there's something called Black Swan in our world, and I'm sure all of you have heard of it. Like, let's say the pandemic was a Black Swan event, and do we have one right in front of us and we're not looking at it? I'm going to talk about it. The other thing is I'm going to start doing some videos about different topics, so please subscribe, turn on notifications so you can see them. Mostly general topics or what's happening currently, as opposed to the education part. The education part will keep going on, but those are, in our world, it's called evergreen. So you can always visit them, you can always check them out, you can always figure it out. But there are things going on during the week that I want to talk about, right? And I have very strong opinions about. It doesn't have to be trading related. It's not going to be politics, obviously, but it's definitely going to be affecting the markets that I'm looking at. So with that said, please keep your questions for later. Let's go. So we talked about options, okay? We talked about what they are. Options are the right to purchase the underlying asset at a certain time at a certain price, right? So there were call options, there were put options. So just a little recap. Call options mean you want the underlying equity or asset that you're trading to go up. Put option means you want it to go down, right? There are 4 or 5 different key words that you have to understand when it comes to options. That's the basics, the fundamentals. One is call option. The other one is a put option. The other one is expiration date. That's when the option expires. It literally does. In most cases, it's the third Friday of every month. But then, during the pandemic and even way before then, they started introducing OPDs or weekly options on a lot of stocks, indexes. A lot of stuff is going on, and that's when all the meme boys made their money. Like, they would go buy way out of the money meme stock options, and they would make a fortune. But I'm pretty sure they lost all of it. The other thing is, besides expiration date, you have to guys understand something called strike price. Strike price is where your deal is made, right? So I'll give you guys a quick example. Let's say Meta, right? Meta, you want to buy $400 options on stock is exactly at 400. The $400 option is the strike price of the option, and they will have strike prices every $5 up and every $5 down, all the way into the 200s, all the way into the probably 600s. And for that, you guys have to look at something called option chain. Okay. Now, with a lot of brokers, by the way, there's 2 people that used my referral code for Robinhood, and I got $5. Thank you so much. A lot of the brokers that you're going to use, Schwab and Ameritrade and IBK, Webull and Robinhood and whatever, they all have option chains. They offer it to you for free. So option chain basically is the bigger picture of all the underlying options on an equity or an asset class. Okay. And with a click of a mouse, right, you can just literally look at different expiration prices, expiration values, as well as strike prices. Okay. And I will explain why I look at options, and I will start talking actually next week. I'm going to start talking about, probably next Friday, talking about something called the Greeks that are very, very important that you have to understand. If you did order your books, they're going to be in there, I'm pretty sure. And so when I'm trading an option, I always look at the option chain. I look at different strike prices. I look at the delta. I look at the gamma. Those are the two Greeks. I'm not going to get into it though. I look at what's beneficial for me. Is there earnings coming out on the stock? You guys have to figure all these things out, right? Like past week, we had the earnings releases on the Magnificent Seven. Well, the last one is going to be NVIDIA coming up. But you know, on Facebook and Apple and all that, right? You should have looked at the stock options, and you would have figured out that they're all priced differently, because there is news coming up. The short-term options will be priced a lot higher, and the pricing of the option, by the way, is called premium. That's the premium you're going to pay to buy a call option or buy a put option. Now, 5 words, right? Call option, put option, expiration date, strike price, and premium. There's many other things. It's in your books. You should, but these are the basics that when I talk about options in the future, I want to talk the same language as you guys, so you understand at least what I'm saying. So, you know, it doesn't sound completely gibberish to you guys. So option chain is a combined look of all strike prices and all expiration dates. So it's an important thing that you guys pay attention to if you're going to trade options. Options are, again, derivatives, as you guys know. So an option chain, as it says here, right, of all available option contracts for a given security, right? It shows all the listed puts, the calls, their expiration, strike price, volume, pricing information for a single underlying asset within a given maturity period, which is the expiration date. And these are all categorized by calls and puts. So if you think the stock is going to go up, you know, it's going to go up. If you think it's going to go down, you buy a put. If you think it's going to go up, you buy a call. And the next one is, I mean, I put these slides up just for you guys to, you know, have an understanding. And if you rewatch it later, if I'm going too fast, you guys will have a much clearer understanding of what I'm trying to teach or say. As it says here, the majority of online brokers and stock trading platforms display option quotes in the form of an option chain using real-time or delayed data. Most of them are real-time. Don't look at delayed data, because then you're going to get screwed. Traders may quickly find an asset's trading activity, including the frequency, volume of trading, expiration date, so on and so on. You know, I'm going to, in the future weeks, I'm going to explain to you guys what I look at when I'm going to buy an option or sell an option, because you can also sell an option without having it. That's a different situation. So the key takeaways: an option chain is a table displaying option quotes for a particular underlying security. Correct. The option chain matrix is updated in real time, showing the last price, trading volume, best bid and offer for the calls and puts of an option series, typically segmented by expiration date, and strike prices. An option strike price is also listed, which is the stock price at which the investor buys the stock if the option is exercised. Now, exercising means you bought an option on the 3rd Friday of the month. The stock price is actually above the strike price that you bought. You have the right now, right? Not the obligation. You have the right. You can either sell the option, realize your profit if you have one, or you can actually purchase this option, because when you created that option contract with the seller, you have the right to buy that stock at a certain time at a certain price. The seller has the obligation to sell that to you. So selling options is a lot more risky, but also lucrative, since 90% of options expire worthless. We are going to get into all these things in the future episodes of Power Hour. So keep your questions for later. So the second thing I want to talk to you guys about, which actually this is like near and dear to my heart. I mean, I have an economics and finance background. I look at the tea leaves completely differently than a lot of YouTube jockeys out there. You know, a lot of people, a lot of smart people talk about it. I mean, in my circle, we talk quite a bit about it. You know, they call me doom and gloomer. No, I'm not a doom and gloomer. I'm just trading whatever is moving. To me, the important thing is that, though, the underlying fundamentals have to be understood. By the way, sorry, I jumped myself. Going back to option chains, these are my two option chains. There was earnings coming out on a company we all know probably called Beyond Meat, right? These guys make the fake meat, you know, whatever is made of. I have never had it. If you guys had it, great. So as you guys can see, this is the option chain that's presented to me, right? Now, this may look all kinds of gibberish to you guys, but don't worry. So on the way up top, right next to the live stream, this live count, the price of the stock and the symbol of the stock is inputted, right? It says BYND is that symbol. So the price is 833 and change, right? So Beyond Meat had earnings coming out this past week, this week actually. So I'm going to make you guys understand how option prices are priced differently for news events that are due on an equity. So if you guys can see on the right-hand screenshot, these are all the calls, and I highlighted the $10 strike price calls. But if you guys can see towards the upper third where it says calls, right next to it, it will say May 10th. May 10th is today. Those were the options that were expiring today, right? However, because there was news coming up and stock was anticipated to move quite a bit, look at the highlighted line, right? Look at the price. And on the one on the left, by the way, expires on third Friday of June, which is next month, right? So on that $10 strike price, you guys can see the volume, the bid, the ask, the last, all that good stuff. But all the way to the right, which is something that I watch like a hawk on every option, is something called, let's add another word to ours. So call, put, expiration date, strike price, premium, and implied volatility, IV in our world. That's what it's called. Look at the IV on the right hand, right column, far right column. It says IV, right? I highlighted the same strike price, but different expiration dates on the same stock. Okay. Look at the implied volatility on the May 10th options, which is at 332%. So they were expecting a massive move after the earnings, which it did. Stock is now under 7. But 332% versus, if you'll go look at the left one, June is at 117%. Okay. So if you're paying this kind of implied volatility, when the market makers are not stupid, they're not going to sell you something for free or cheap. Okay. What they do is they pump up the implied volatility on an option to protect themselves, because they are the sellers ultimately of these, right? There's a buyer and the seller of an option. When a market maker sells something to you and they're taking risk, right? So that risk is adjusted by implied volatility. But we will talk about implied volatility in the coming weeks. It is probably the most important thing outside Delta, one of the Greeks, that you guys need to start watching. So implied volatility has to be something that you guys start watching. So this is an option chain. This is what it looks like. All you have to do is input the symbol up on the upper left-hand corner or wherever your box is on your trading platform. And sure enough, it'll pop up the screen. You can change the expiration date with a click of a mouse, and then it'll give you all the options. The calls, these are the calls. But then again, if you guys see on the box, it says calls, you guys can click on puts and it'll give you the puts on a live basis. So this is what an option chain looks like on my screen. And I pay attention to all strike prices like a hawk, okay? Specifically implied volatility. So let's go to the next one. These are the books that I had recommended to you guys. This is for the beginner series. This is an amazing book. All these books, I have no affiliation with anybody. I have read these books. That's why I'm recommending it to you guys. This is much deeper for more intermediate advanced of people, but it still talks about the basics and different strategies. There is all these kind of weird names when it comes to option strategies. There's something called a condor. There is something called a butterfly spread. There is spreads. It's not the peanut butter spread, but spreads. bull spreads, bear spreads. You know, the lingo will come to you guys, but take it slow. Options are probably the most complicated things you guys will ever learn. It took me, I mean, I knew about them, but then once I started working on Wall Street, it took me literally like 6 months to learn from the pros all these strategies and what strategy should be applied to an underlying asset or underlying equity, right? And there's a strategy for every season, and we will get into that in the future once you have read up the books. But lastly, 6 words, right? Call, put, expiration date, strike price, premium, implied volatility. Start paying attention to these things. So, I, you know, black swans. What are black swans? They're unexpected events, but some black swans are right in front of our face, and we can't even see them, right? And so, if I may talk to our Federal Reserve, federally, you know, like I talked to the other companies on the other channel, Federal Reserve, stop printing money. Stop mortgaging my children's future. You already done it to the tune of $34 billion. Not billion. What am I saying? Trillion. How many zeros are in a trillion? I'm not even sure how many zeros. 12, 4, 6, 15? I don't even know. The point I'm trying to make to the Federal Reserve is neither printing or inflating is going to save this. It's just not going to work. In 2008, when we had the great financial crisis, it only took $800 billion, which is called TARP, right? They created the TARP fund and lowered the rates to zero, which is ZIRP, zero interest rate policy, for what, 12 years, 14, 15, 16 years, saved all the banks, which they shouldn't have been saved. Bye-bye. You know, some of them went under, like Countrywide did, Washington Mutual did, a lot of smaller banks went under, and then all they did is they took the banks, all these bankrupt banks, like Wachovia, and they dumped it into JP Morgan, they dumped it into Bank of America, like Countrywide and B of A. What I'm trying to say to the Fed is, this is not the way to run an economy, Fed, because you are not working for the average American. What you're doing is you're hurting the average American, okay? But I will do a separate video about that. I'm hot about this subject. However, the black swan that I'm looking at, that I've been looking at for, I don't know, a year now. What is it? Do you guys see this chart right here? This is the 10-year treasury rate, treasury note. This was a zero, literally zero, as you guys can see on the chart, for, I don't know, 10 years, 12 years, right? At the same time, we were printing money constantly. The printing machines were going on 24/7. By the way, the Federal Reserve Chairman on 60 Minutes said, they asked him this question, do you literally print money? They go, no, we don't print money anymore. What we do is we have our ledgers. All we do is add zeros when we want to create money out of thin air. What the F? I can't do that. I can't go add zeros to my bank account and make myself look a trillionaire. You know what I'm saying? This has a lot of problems, you know. I mean, I'm so like passionate about the subject. This is the reason, by the way, 3% of the country owns 97% of the assets. They're the only ones that can borrow at 0% and buy all the assets, okay? But I will talk about those later. So here's the interest rates, what has happened to the 10-year note, right? This, by the way, you know, regulates your credit card debt, your mortgage, your any borrowing or car loans, any borrowing that you're going to do. Obviously, because the Fed figured, okay, we're pumping all this money, we're creating inflating, we're creating this inflation, it's hurting the people. Well, of course it is. Everything we buy is up like twice or threefold, right? So, you know, most of you don't remember this. I'm old enough to remember. In 1978, there was a Federal Reserve Chairman called Paul Volcker, right? You guys are all used to the zero interest rates for years and years and years, and that's why a lot of these traders are getting nailed, because they haven't seen it. They haven't seen higher interest rates. And you may all think from 0 to 5% almost now, interest rates are too high. Oh, no. Average mortgage in the history of this country is about 11%. We're at 7% and the housing is about to crash, right? So, and all the housing sales have stopped because it's unaffordable to buy housing, to buy a house. Imagine you just graduate from college. What money do you have to buy a house? And then because the mortgage rates went from 3.5% to 4% on a 30-year fixed, now they're at 7.5%. Your mortgage just doubled just on the interest alone, right? But that's because of the Federal Reserve. So Federal Reserve, in their wisdom, figured, hey man, we're inflating, everything's price is going up. What is the way to stop that? That's the way to stop that is a brake check. Brake check in the finance world is raising interest rates, which Paul Volcker did in 1978. You know what the interest rates were in 1978, people? Huh? 20%. Do you know what will happen to this economy if Fed has to raise the rates, keep raising the rates? Number one, they're killing themselves because they have 34 trillion in debt. The servicing of that debt is automatically just, went up fourfold, the interest payments on that alone. This is what we're doing to this country. We're absolutely just ruining this country and the future generation. But again, different topic. So when the rates go up, equities don't do well, okay? And we know, I'm going to share my screen in a minute with you guys, what happened last year. But what happens is that market is always 6 months ahead in anticipation of what the Fed is going to do, right? And this gentleman, his name is Logan Kane, he wrote it on Seeking Alpha. I like reading that thing once in a while. So this paragraph hit me really, really hot, right? So neither borrowing money nor printing is the magic trick. No shit. Our society's resources are what they are, and politics can only redistribute them in the short run, not fundamentally solve the problem of scarcity. Absolutely. The reason why millions of Americans are struggling with the cost of living is because the government printed too much money during COVID. People, in 2008, during the great financial crisis, when, by the way, the government was saying to everybody should buy a home. I had a mortgage company in between 2002 and 2008. I used to do loans to gardeners who cut my grass, calling them landscape designers, inflating their income, no income, no asset loans. And that's why housing did what it did. Everybody bought a house. And what happened? Everybody lost their house due to foreclosures because they couldn't afford those payments. Now, we're doing the same thing. During COVID, TARP was only $800 billion. Not COVID, during the GFC, Great Financial Crisis in 2008. Fast forward 12 years, COVID hits, right? Everything is crashing. Everybody is stuck in their homes because our economy depends on spending, right? It doesn't depend on manufacturing that it used to do 50 years ago. We have nothing. All we do is watch Facebook. And that's all we do is spend money. The gross domestic product of this country, 75% of it is from spending because they want us to spend. You give the credit card, spend. Well, that's why we are where we are. But in 2020, when COVID hit, guess how much money it took to save the economy from the abyss, from depression? $5 trillion with a T. That goes right into the debt load, right? Okay. Every 10, 12 years, we'll have one of these things, right? It's a fact. You guys can go back, look at the history. Next one, because they didn't cut the rope, right? They didn't let there was something called too big to fail. They didn't allow the shit companies to fail, shit banks to fail in 2008. Now we have a bigger bubble. Now we keep building this bubble. The next event, the Black Swan event, is going to cost us, the taxpayers, at least 10 to 15 trillion dollars, because that's what happens. All you're doing is keep inflating this bubble. More debt. More companies have more debt today. Credit card debt through the roof on the personal level. Bank, company debt through the roof. Car loans through the roof. They're all going bad. Repo Man is very happy. But going back to this, stop printing money, because the dummy version of inflation means too much money chasing too few assets. And that's exactly why the stock market is being inflated. That's exactly why your house price went up 50%. It wasn't fundamental. It was too much money chasing too few goods. And now the reason that millions of Americans can't buy homes is because the feds are crowding them out by investing billions in pork barrel projects in swing states. Correct. What happens next? The government won't slow the spending because we're in an election year. We just keep adding to the bullshit. Due to high government spending and a series of hot inflation reports, the treasury yields are near 20-year highs. Exactly. That's the first chart right here that I looked at or showed you guys. And the potential for much higher yields is supported by theoretical, practical, and historical reasons. Absolutely. We could easily reach, because the reason is they put the inflation genie out of the bottle. It is not easy to put that genie back in the bottle. You guys, they can all, every month, they can come and say, oh, no. They're even thinking about lowering interest rates, right? Do you know why? Because there's always a 6-month to an 8-month lag between economic activity and what happens to interest rates, okay? Economic activity always slows down when rates go up, right? I mean, look, I can go today, invest in a 3-month treasury bill at 5% plus and give my money to the US government with no risk. Why should I go open a business? Why should I go invest in anything? Risk-free money versus I got to do something else. Or how about the people who are, on W-2s and they don't have enough money now, right? I mean, look, inflation is killing these people. Inflation is a tax on these people. So the first punch to the American consumer, American public by the Fed was inflate, 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 inflate. Okay, we inflated. We gave everybody money that was sitting home so you can open, trade stocks, meme stocks, and blow that money as well, because that's in the, rich hands now. Then now we have inflation. Everything's prices up. So to kill inflation, the antidote to inflation is higher interest rates. That's what the Fed has done in the history of this country, and that's what they're doing now. Rates going from 0 to 5% is not a good thing, right? A lot of corporate debt is coming to get refinanced, and they're not going to be able to afford it because the economy is going to slow down. And that lag now is coming up. And you guys are going to say, well, Serge, why is the stock market at all-time highs? It's because the market is anticipating lowering rates because the Fed knows they're going to put us in a recession with these high interest rates. And the day the market tops, by the way, it will be the day they start lowering rates, because Fed never lowers rates when things are good. Fed always increases rates when things are good, and they lower rates. So basically, look at this as the gas pedal in your car. If you want to go faster, right, move the economy faster, you lower interest rates. So borrowing activity picks up and people start spending money. If you want to slow the economy, the brake is higher interest rates of the economy, right? So I have a lot more to talk about this. As you guys can say, I get hot talking about the Fed. So lastly, this is my mini Robinhood account. I started 3 weeks ago with $1,000. I got my $5 worth of free shares, which I picked one out of the 20 they're offering. The first week, it went from 1,000 to 1189.96. The second week, it went to, I explained it. You guys can go watch the Power Hour in the past. It doubled, basically, double and change. The 22, 47, 68. And this week, I'm at 23, 10, 10. You guys are going to say, oh, boo, you didn't do that well, Serge. You doubled the first week. We were expecting another double. Hey, people. I'm not gambling. I'm in a marathon here. I don't want to blow this money. I mean, look, it's putting a lot of pressure on me, actually, taken away from my big account, trading account, because I'm like trying to be really careful with this. I know when to put the gas on this, but this week it went up about, I don't know, $65, $63, which is about 3%. Hey, all of you will take 3% a week, not to worry. So I'm going up. When I hit like maybe $3,000 on this account, then I will, put on the accelerator a little bit, take a little bit more risk. The problem I have with this account is I can't buy and sell the same day. Okay. The reason I also slowed down a little bit this week is because I got hit with a pattern day trader the week that I doubled the account. It was under Canopy Growth. I bought and sold the same thing 3 times a day. And then I got the warning saying on the next one, your account is going to be hit with PDT. And PDT is not a good thing. Then they will have to force you to put 25K equity in your account, which I'm not going to do with this account. Now, on this account, I'm not going to add more money, take money out. I'm just going to let it go to the end of the year. Let's see where I can take this. I don't know. Can I buy a Tesla with that at the end of the year? Maybe. By then Tesla should be cheap. So with that said, education part is done. Good, Chris. I did it in half an hour. So now, if you have any questions, please let me know. If not, then I'm going to share my screen. I'm going to start looking at certain things and give you my opinion about the markets. Okay. So here's my trading screen. Let me go. See, I even know how to use this, Chris, now. This is my trading screen in the background. I'm going to go through what the market is doing. As you guys can see, it's pretty red on the lower right-hand side. But then there are stocks that are green. There are actually this stock right here, where you guys see my cursor, is making an all-time high. I'm going to start talking about this. This is a very important issue. The issue here is outperformance or underperformance. What's underperforming the market? What's outperforming the market, right? The benchmarks are the S&P 500 and the triple Qs, the NASDAQ 100. So I'm going to go to the S&P 500, what it's done. You guys can see this, right? Okay, so we had a little bit of a pullback. Again, trend is your friend, people, right? You guys see this. It's in a clear uptrend. I mean, I don't know what else to say. Within the uptrend, there are corrections. So you guys can see my cursor. This was a correction. But guess what? Guess what? Market, sure enough, walked itself back up. And from exactly the support line that I had drawn, right? This was the next support line if it had broken. So we're going back to technical analysis, right? This is the next support line. Last week, I talked about moving averages. Here's I'm highlighting it now. This is the 20-day moving average. This is the 50-day exponential moving average. And this is the 200-day exponential moving average, which is looked at as support, right? And on the bottom, I had my own balance volume and I have my RSI. So this chart is as naked as it could be for anybody. I highly recommend do not draw millions of lines on your charts. Please keep it simple, stupid. So the market's back into resistance now, right? To right here, to all-time highs, right? Well, you guys are going to say, Serge, you're negative. Yes, actually, I have a very negative bias. That's why on my bigger trading account, main trading account, I had a rough week, actually, but then I will put that up once a month at the end of the month. I mean, I didn't lose money, but it's really difficult for me to pull the trigger on the upside on stocks because I have a negative bias. I know shit's going to hit the fan. I cannot tell you when, but I see at best sideways markets for a long time, unless the economy goes into a recession due to the Fed's increasing rates, and then we'll have something different. But we'll look at that when we get there. So I think what's going to happen here is my opinion. I have a negative bias. So it's going to be difficult for me to trade things on the long side, but I can short things, which I'm going to start talking about actually next week. How do I short things? Well, yeah, that's going to be interesting for you guys to understand. So as far as I'm concerned, what's going to happen is this is the S&P 500. It's going to get stuck up here. It's going to have a pullback, probably to the 50-day average, and then go back up. It may make a new high. I mean, it's a clear uptrend. Whoever says, oh, market's going to top, remember we talked about patterns, right? One of the patterns was a double top. There is one top. If this rolls over, starts coming down, that will be the double top. So pay attention to your technical trading books. So next one, I'm going to show you guys the triple Qs, right? Triple Qs are the NASDAQ 100. Same thing. It came exactly to the support area right here, literally like to the penny. Now it's bouncing. We have a little bit of an uptrend going here within the uptrend, right? That's a little short one. You guys got it. You can draw that line because it has 2 points of contact now. And here's the 50-day, here's the 200-day average, 50-day, and the 20-day exponential moving average. You guys gonna ask me now, what is that purple thing? This is called the Bollinger Band, which I love, I watch. But again, short, here's the resistance, all-time highs. Is it going to go to all-time highs? Yeah, I mean, it corrected from 448 or 450 to 413, which is about 35 points, 35 handles, about 7-8% correction. And that's what in bull markets, things happen. 7-8% corrections come. So which way would you rather trade this, people? Would you rather trade this with the trend or anticipate a top and short the market? I mean, come on, right? Obviously, trade with the trend. See all these little pullbacks that it has? It's in an uptrend. Trade with the trend. If you trade against the trend, you're going to get smashed, period. And by the way, I don't know what's going to happen. I will react to what happens. Right now, I'm almost flat in my big account, and I'm completely flat in the Robinhood account. I really don't want to anticipate things. I cannot anticipate things. Okay. I just react when the tea leaves line up and market tells me something. Markets open every day. You don't need to trade every day. Don't be a stock jockey. And the last one that I'm going to show you guys is something called TLT. This is the 10-year note, people. Okay. Let me pull this back for you guys so you guys understand what the hell I'm saying here. This is 10 years or 15 years going back. Actually, let's go to max. 30 years. We are back to all the way to the left, by the way, is 2005. Remember that article? The guy says, we're at a 20-year high in interest rates. Yeah, we are. And so this is an inverted version of the 10-year treasury note, right? So this is where, right here is where the pandemic took place and interest rates went to zero, right? This is right about here is about zero. Now, they printed $5 trillion, put it into the economy. Well, you can't take that money out of the economy. It's in the, it's in circulation now. So now the rates have been going up. So when this chart is going down, that means the actual rates are going up. This is the black swan that I'm talking about, right? Every single time when this happened, we're back to 20 years ago where the rates were, okay? And for 20 years, rates were going down. Now rates are going up, okay? That will definitely affect. There's definitely a correlation between the equity, stock market, real estate, Bitcoin, anything with interest rates. Look, I don't have to buy and sell stocks. I can put my money risk-free at 5% on a CD. Why do I have to do this, right? So now at 5%, these interest rates are competing with the returns in the stock market. You're going to say, yeah, Serge, but NVIDIA went up 7,000%. Yeah, I know, but you have to find NVIDIA and you have to be in it for a while. So let's take it back to 1 year. So this is what's happening short term. This is 1 year. This is what's happening. Rates actually started going back up again. Right here is when the market bottomed. And there was talk that Fed is going to start cutting rates now because we're going to go into recession. Interest rates go down. So this is inverse again, people. So when the chart's going up, that means interest rates are going down. Interest rates go down. Market goes up. Interest rates go up, which has been, you guys see this channel that I drew, these two trend lines, right? There's the upper trend line. This is the lower trend line. It's inside the channel. I don't know what the market's business is being at all-time highs while the interest rates have gone up over the last, 3 months or so. You know what I'm saying? So we're creating something here. I think it's going to get super volatile shortly, probably. And there's also a saying my mentors used to say, sell in May, go away, and then come back after summer. We'll see how it goes. Look, I'm not predicting anything. I'm not giving you guys any advice. Lastly, let me show you guys my top 10 stocks that I'm trading this week, and or at least looking to trade. Okay. So, again, the trend is your friend, right? These are the types of stocks that I like. Market goes up, stock goes up. Market goes down, stock goes up. Okay. This is called Wayfair, right? This is the 1 year chart. Now it's been clearly an uptrend has been established. You guys look at the right-hand side of my screen. The next one is Riley. This actually I talked to you guys last week about. I'm long at 30. Earnings are coming out next week. Market's doing what it's doing. Stock is at 32. I'm up a couple of points. I talked to you guys about Serve Robotics. Actually, in my small account, I made some money on Serve Robotics. That's the little bug-eye robots that you guys see delivering food. This is MicroStrategy. MicroStrategy is, we did the video. Please go watch it. Is the surrogate of Bitcoin. Super volatile equity, obviously, right? And Bitcoin is right about 61,000 now. It's down about a couple thousand. Another one is okay. Here, I'll give you guys an example. What do you guys think this is? Uptrend or a downtrend? I mean, clear uptrend. Stock was 30, now it's 70. It was 30 in December. In 4 months, it's 70. What is this? This is Kava, right? Kava is the Middle Eastern version of Chipotle. And here's Chipotle, by the way, people. See, you don't have to just, by the way, people go, what did the market did today? I really don't care what the market did, as long as my stock is doing fine. I don't own the market. I only own a stock. And this is Chipotle. What does this look like to you people? Does this look pretty good? That looks pretty good to me, right? I mean, market goes down, stock goes up. Market goes up, stock goes more up, right? Here's Chipotle, 1900 to 3200, right? You guys are going to say, oh, Serge is expensive. Yeah, you can buy fractional shares and participate. What I'm trying to say is that, people, you don't own the market. You own individual stocks. All you have to do, study hard, look at charts, and find these. I mean, if you didn't make money on Chipotle going from 1800 to 3200 in, I don't know, last October, November, this thing was like 1800, right? If you, I'm almost double now. If you can't find these and make money in this uptrend, I don't know what else to say. Maybe this is not for you guys. I do. You know, let's look at a couple of things that I'm really, really liking. I mean, super liking it, really. And I will show you guys why the reasons are. Here we go. Okay. This is Albemarle, right? This stock is basing. I'm not long yet, but you guys see this downtrend that's coming out right here? This one I highlighted that goes back 2 years. There's a clear downtrend. If that thing breaks, this stock is going to 240. This is going up 50%. You guys got to be patient though. This is basing. Support is right here. Okay. Short-term resistance was broken this week. It's above it. So put it on your watch list. No action yet. I'm going to show you guys stocks charts that I'm loving right now. This is Alibaba. Short-term. Again, trend has been broken. Stock is on a clear short-term uptrend. Any pullback, I will buy Alibaba. I own it already. That's the second chart you guys need to start paying attention to. Another one is PDD, Pinduoduo. That's the owner of Temu. Uptrend or downtrend? Uptrend, absolutely. And now short-term uptrend created. Okay, you know what? Actually, let me just draw that for you guys. On your technical books, you guys are going to learn something called flags, right? Remember, we will talk about that. Here's the flag that I'm drawing for you guys right here. So that's a clear flag. So this is called the flag pole. It goes from 110 to 130 in 3 days. Now you can trade options, you can do whatever in that period, but we're trading long term. We're not stock jockeying here. This is a flag. What does this pattern look like to you people? Another flag pole. It's called another flag. What are the chances of the stock doing another flagpole? Extremely high. I'm watching this. I own it in my other portfolio, not the trading one. Couple more. These are the types of things I watch, people. You guys got to watch these things. This is Sleep Number. This is the bedding company, a mattress company. I love stocks that base. This has been in a clear downtrend. I don't own it, but what I do now is I start paying attention to it, right? This stock was, during the pandemic, 120 bucks a share. It came all the way down to 10, right? Remember, trend is your friend. Every time you thought this was cheap, you would have lost 90% of your money. So do not trade against the trend. You could have shorted this thing all the way down. I mean, you know, but now what's happening? Things have changed, right? Stocks just basically going sideways. So I watch these things. These are called multi-month bases. The stock is basing, but it's treating itself a little bit better, right? So more sideways action. And we talked about this last week on the patterns. Cup and a handle. Here's the cup. Here's the handle. Literally, it looks like a cup and a handle. This is about to go. Watch list, please. Put it on your watch list. Symbol is SNBR, Sleep Number. And the last one, look at this thing. This is a shipping company, container company. Okay, again, look at it 3 years ago. 3 years ago, height of the pandemic, 90 bucks. Guess what? Downtrend for years. You don't buy it. Why would you buy it? You're wasting money. But now what do we have here? Well, we certainly broke out, didn't we? Right? We based, we created an uptrend, went sideways. This actually looks a lot like Bitcoin chart. And then it broke out. When it broke out, bye, see you later. Now, how should you treat this equity? Well, on any pullback, you should buy it because it's on an uptrend, just like here, right? Just like here. On any pullback, you got to buy it. It's above its 200-day moving average. 50 days turning up, 20 days turning up. On any pullback, this stock needs to be bought. Again, watch list. This has a long way to go if it just started going. See, these trends last years, but when they change, you got to be there. And that's how you create wealth. You buy this thing, you put it away. You don't go trading in and out, in and out, in and out. I mean, this thing already is up 80%, okay, in less than 2 weeks. Is it enough? Maybe for some of you it's enough because you don't have the patience to watch this go back to 30. You know, most likely it's going to go up to here first, which is the resistance line right here, right? Or here, which is 25 to 30. Is it going to go there? I'm pretty sure it is because things are changing. Look at the volume coming into the stock, right? I don't know what else to tell you guys. So that's the stocks on my watch list. I like the stocks. And then I'm going to answer some questions and be done with today. Okay. Chris, you want to come on or no? All right, questions. Any questions? Don't pay any. Okay, you know what? Let me read some of these. Let me see. Hello. Paused. You need fluctuations for markets to reset and allow new people to be able. Hey, yeah, see, I like Daniel. Daniel is a PhD student, by the way. Daniel, extremely intelligent, and I talk to him once in a while. I email him quite a bit. You need fluctuations for markets to reset and allow new people to enter the markets. Correct. Prices don't drop. People who own are happy, but new people can't buy. What happens? That's why there is something called a consolidation phase. Actually, if you look at every chart, people, stocks only go up about 4 months out of the year. The rest of the time, they go sideways. Why? Because earnings are going to have to catch up. That's what happens. And then on the next leg happens, and the next leg. For example, when Starbucks first came around, now Starbucks is a dead issue, but because they reached such massive scale that, you know, to run these companies from $1 trillion to $2 trillion is impossible. But when first Starbucks came around, they were in their expansion phase. They were opening stores and doing this. That's called an expansion phase, and that's when you're going to catch these stocks, right? And when you do, you create generational wealth. I agree. Let's see, William. I was told by a stock jockey. I like that word. I'm going to patent that to look for 10-year notes in 2021 is going to hurt the economy. That's 2021. Yeah, I mean, the rates are going to go up. Rates are going up. I don't know what the market's business is being at all-time highs, but then mark my words. I'm public now. This is like this is there's a record of it on YouTube. When the Fed starts cutting the rates, which was anticipated to be earlier, now they kind of pushed it out because inflation is not dying. Inflation is a very, very troublesome thing, by the way, people. It doesn't die that fast. Okay, what the Fed is doing now, okay, is giving chemotherapy to a dying patient. That's exactly what's happening now, okay? They want to kill all the cells, meaning kill everybody. That's the only way you can kill inflation. Inflation is cancer. You know, even if you leave one cell, it'll come back. And inflation is resistant to a lot of chemotherapy, which is higher rates. So if the higher rates are not enough, you got to go higher. You got to cut the money supply. You stop printing. Stop printing, people. Stop. And so we'll see. It's going to be an interesting year this year. More questions. Michigan sentiment. I don't pay attention to any of those things. Those are temporary. Half the shit is fake anyway. Daniel, I agree though. If Fed does that, okay. Fed's balance sheet. Yep, Fed's balance sheet. Trash. You know, in the great financial crisis, to save some of these shit banks, Fed was accepting collateral as people's underwear. I'm joking, of course, but they were like taking everything from these banks to pump money into the system to save their asses. You shouldn't have, Fed. You shouldn't have. You should have let them die. Because if you cannot run a business properly, you don't belong in business. But in our world, in the US only, by the way, maybe some other European countries, too big to fail. I don't give a rat's ass, bro. If you can't run an airline profitably, if you can't run a bank profitably, I mean, how can you not run a bank profitably? You're borrowing money at 0, selling it at 5. Maybe you shouldn't have put out all these loans, risky loans. Yeah, but that's common sense. And these people are all super educated and, you know, PhDs, by the way. What do you think of economics? Shit. Economic data is always in the past. Show me something from the future. My mentors used to say that. Do you have tomorrow's paper? No. I got to shut up and trade. Okay, yes, sir. So yeah. What else? Any other questions? You guys are all shy. Would you option ALB? No, not yet. I'm watching. On any pullback though, I will start accumulating the equity itself. Stock completely has not broken. If you're going to option anything, Wayfair is one, Carvana is another one. Again, no financial advice, trading advice. Another one is Alibaba. Another one is PDD. Look, there are really great charts. The last one that I showed you, the container stock, any pullback, start accumulating options. Riley is a good one. I mean, these are all charts that I traded. I like them. What else is there? My bias is negative. So when my bias is negative, it's really difficult for me to make money, right? Because my brain goes like, okay, like it shouldn't be this high, but it is. So that's why market's a mechanism, right? To make you wrong. That's what the market does. You know, if I'm thinking market's going down, it keeps just walking higher and higher and higher. And then if I short it, I'm going to lose money. So I've learned not to do that, obviously. But bias is so important, right? I have a negative bias, but I do find good charts to deal with, and then I go long, no problem. That comes with 30 years of experience, right? You just literally have to talk against yourself constantly. Yes, sir, you have a negative bias in the overall market, but then within there are gems that you need to look at. So yeah, it's tough, you know. I mean, I'm up like 200% in my other account this year, so I'm not going to blow that stack. I'm going to actually try to go up another 50% on that account from where it stands, but I'll share that with you guys on the end of May. Any other questions? Come on now. You guys are all being shy, man. Class is in session. You're not going to see me until Friday, people. Come on now. I showed you the watch list that I'm watching. I talked about the general market. Did I forget anything, Chris? Is there anything I forgot? I don't think so. Anyway, look out for the videos. Okay, well, let's finish it then. Every Monday, Friday, Power Hour, we're putting videos out. Thanks for the support. Is it better to buy when the stock on a downtrend? Or obviously, if you want to buy, better on an uptrend. Wait for pullbacks and buy it. Now, next week, I'm going to talk about shorting. When it's on a downtrend, you sell, you short, because you can make more money, okay? You can make more money, things going down than to go up. It's called stocks go up in stair step and they come down in an elevator, express elevator, okay? That's how the world works, man. It's also called gravity. I mean, people, like, I say this thing to people in dinner parties and stuff. It goes, come on, Serge, you know more than this. I'm like, buddy, I'm just trying to explain it to you. If I explain it to you the way I'm thinking, you will not understand. But this is how things work. So it's better to buy stocks on an uptrend when they pull back. Absolutely. Okay. I'll put a picture. Never, okay, another, gem from my mentors. Do not catch a falling knife. Electronic. What are your chances? Let's say you drop a really super sharp blade from 5 feet up, or hold it up like this, and with the other hand, you're trying to catch it, right? From 5 feet distance. What are your chances of grabbing the handle? Huh? Very low. You know what's going to happen to that blade? It's going to slice right through your hand. So do not try to catch a falling knife. Don't. Let the things move, start moving. Because if a stock is going to move from 10 to 30, you don't have to buy it at 10. You don't have to sell it at 30. You can buy it miss it by 50%. You can buy it at 15 and sell it at 25 in that middle 20 points, right? You just grab the 10 out of the 20 that's moving. That's all you need. That's a double. What else is there? I don't know what else to say. How would I do what? How would an uptick of potential interest rates hike move CDs versus stocks? Yeah, CDs are 3 month, 6 month, 1 year CDs, 5% at your bank or credit union, right? It was zero. Remember, it was too long ago, like a year and a half ago, it was zero. Now it's 5. Risk-free money up to 250,000 with FDIC, obviously. Back up. Yeah, I mean, stocks have no business being at all-time highs. Period. It's just not. Again, this is my bias. If the rates keep going higher, those stocks will break. Okay, without a question, stocks will break. But within that break, you will find gems to trade. There's 10,000 stocks on NASDAQ, Amex, and New York Stock Exchange. You have to have a system to find, and I will start sharing what I'm finding, like I did this week. I gave you guys 5 stocks to watch. Those are the things I'm watching. I mean, I'm not going to just chew it and put it in your mouth, but that's the best I can do. A company folding brings value down to zero. High interest rates pressure. Yep, absolutely. A company folding brings value to zero. High interest rates pressure. Absolutely, not upward. There's the formula that shows this. Absolutely. But this is the bigger picture of it, right? There's a lot of secondary. I'm not worried about Apple with their $150 billion cash hoard, or Google, or Meta, or Microsoft. I'm not worried about those companies. You guys have to start understanding that the economy is not just those companies. Yes, they're a major part of it, but all the mom and pop shops, all the private companies that are in business, they do borrow money, right? They don't borrow money at where Apple borrows money. And they're very, very sensitive to what the Fed is doing with the federal funds rate, raising the rates. So if you're running a small company with small margins, and your note is coming due, and now you have to roll it over because you didn't make enough money to pay your note off, the next time you're rolling that note over is going to be at 5% higher interest rates. Now, can your business sustain that 5% increase in servicing your debt? Absolutely not. Bye-bye, bankrupt. Amazon. Okay, William, I'll look at Amazon for you. Yes, there are. Yes and no. I mean, Amazon is so big, it's just tough to move these things. There are smaller stocks that just do so much better, which I'm good at finding. So let's take a look at Amazon, and we'll finish right there. Okay, and here's Amazon. I mean, well, let's go back on Amazon. 2 years, 3 years, 5 years, right? 10 years. I mean, look, it's an uptrend, but if you owned Amazon actually, Amazon is coming back to where it was in 2021, just now. You guys see these tops right here? My cursor, that's the pandemic. So, yeah, yes and no. I mean, Amazon got a massive haircut, right? Last year in when the rates were going up. This is what happens when the rates go up, people. Stocks do this, then we go short. But the point is, Amazon is coming back to where exactly it was 3 years ago. Okay. It went from 180 or 190 to 80. I mean, you're not going to buy the low, but that now, clearly, since November of 2023, it's in an uptrend. Would I buy Amazon with your money? No. There are so many better things, different cycle stocks. Again, Amazon is worth 3 trillion, Apple 2 trillion. It's tough to grow these companies, tough to move the needle with these companies, right? But one of my most favorite companies ever in the history of the United States, Costco. They treat their employees amazingly well. They make 3% margin. They sell the shit out of stuff and save your asses. And here's Costco. Which one would you own, William? Costco or Amazon? Hell no, Amazon. Hell yeah, Costco. This is 2 years on Costco. This is 3 years on Costco. This is 5 years on Costco. This is 10 years on Costco. Look, if you're going to tell me, Serge, you're dreaming nobody holds a stock for 10 years, you all are fools. People buy companies that they deal with, and they love these companies. I love Costco. And if you didn't make money on Costco in the last 10 years, you don't need to watch me. You need other help. But with that said, it's 10:58. I gotta go back to my trading. My my big account is suffering. I don't know why. It's not suffering. It's doing well. However, anyway, so what are your views on IPOs? Depends. Like, there is a Chinese electric car company that came around today. I forgot the name, honestly. They priced it at 21. It opened at 27. Some IPOs are good. Some IPOs are bad. I really don't pay attention to IPOs. Like, Reddit came IPO. Roblox came IPO last year. It got smashed yesterday. Not every IPO is good. When the market's hot, they price IPOs completely stupidly, right? I mean, look at Uber, right? Uber came IPO at 45. It was under its IPO, or Lyft came at 72. Stock is 17. I mean, some IPOs are good. I mean, generational IPOs, okay? Facebook, $40, came at 40. Meta obviously, went down to 20s, and then look where it's at now, right? I mean, look, some of them are great, some of them are bad. You have to have a really long opinion about IPOs. IPOs are happening because the company is maturing and they need public funds. So yeah, I mean, it's okay. Not my cup of tea. I'd rather have a deal with established companies. Now, the other thing is, a lot of people are asking me about Bitcoin. I'm like, listen, man, I told you guys last week, I own Bitcoin. I like Bitcoin. I think everybody should own 10% of their assets in Bitcoin, because when I got hot and talked about the Fed, what the Fed is doing, Bitcoin is anti-inflationary. Bitcoin, there's no inflation in Bitcoin. You can't print more Bitcoin. We can print all the US dollars, which we continuously do for one reason or another. But Bitcoin, no, there's 21 million, limited supply. When it ends, all mining, and I mean, a lot of people know this is not public info. About 4 to 5 of these Bitcoins are lost forever, right? From the start days. And it's mined up to 19 million. There's only 21 million. You know when Bitcoin will crash? It will actually disappear if Satoshi comes out and says, "Oh, I'm issuing another 21 million Bitcoin." That means what? Dilution completely by 100%. Then you're effed. Then Bitcoin goes to zero. I don't think that's going to happen. As a proof of concept, everything is done. Proof of contract. I think Bitcoin and MicroStrategy should be watched together. That's a surrogate. It's trading at like about a 3 billion premium, which is worth, because MicroStrategy is a company as well. It's an IT company. I'm going to do a video this weekend about Michael Saylor. I think, is he a genius or a gambler? He's literally mortgaging his company to buy Bitcoin. He's the largest corporate holder of Bitcoin on the planet. He owns 215,000 Bitcoin. And so with that said, much love. We'll see you guys on Monday. So my small account did okay, 3%. I'll take it. If you're going to open a Robinhood account, just go use my link, referral link. I get free shares of something. But anyway, hope you guys learned. Much love. See you guys Monday.